you'll still benefit from it eventually, but there's no immediate tax impact. So it may not make sense to pay, $5, $6, $7, $8,000 for a cost segregation study when it doesn't yield any immediate tax benefit. So when you're using a short-term rental loophole strategy with your clients, if you're going to include that in your tax planning, you have to be really sure that they qualify for the loophole. Otherwise, they don't get to take advantage of any of the tax savings immediately. So we talked about cost seg. Some of the gotchas with short-term rentals is that they depreciate over 39 years, not 27 and a half. And that's because they're considered non-residential rentals. There are personal residence rules. So if you use your short-term rental more than a certain number of days per year, it's considered a personal residence, and that changes the tax treatment. We talked about that pretty in depth. We talked about 280A and how those losses get limited. You should be able to refer back. It was a May session. So if you need to refresh yourself, go back to that session because we spent a good amount of time talking through these. Then the last thing we talked about is the tax treatment for short-term rentals. There is a lot of misinformation out there about this. And so I did want to take a minute to talk about that again on this session, because a lot of times I hear people or I read posts where people say it's a short-term rental, it automatically goes on Schedule C. And that is incorrect. So if you're doing that, you're subjecting your client's income to self-employment tax when you don't have to. So if it's a short-term rental and no significant services are provided, so it's that less than 7 days, average use, no significant services, it goes on Schedule E, not subject to self-employment tax, 39-year depreciation. It can still be considered a Section 162 trade or business for purposes of QBI. You can look up the rules for Section 172, what is considered a trade or business, but in very general strokes, if they have a profit motive, right?